The type of investment that is coming now, if this becomes the norm, is not looking so much at the EBITDA and the multiplier, but at cash generation, the ability to have regular cash inflows and pay debt and so on, and some more financial metrics that are less about explosive growth, but about steady growth, regular business, and so on. That's a change. Another thing that we've seen in the M&A space in 2025 is that there were a lot of companies that went to the market trying to be acquired and to raise money and to grow, that pulled out of the market after a while because they weren't getting the kind of money that they expected. I am aware of at least 6 or 7 companies that went through this process from the second half of 2025 to the beginning of this year, companies that were ready to monetize, or private equity firms that wanted to exit the market, but the market is not offering the price and the premium that they were expecting for. So this is a period of adjustment. The business models are not consolidated, so we don't know what is going to happen until companies adapt. Keep in mind that this major change that is happening in all the industries is very recent. It started in November 2022. So we have 3.5 years of experiencing this transformation, and we're still learning how to grow business in this space. There's a shift from growth in EBITDA and revenue to margin improvement. So we discussed the difference between making $30 million with $1 million profit or $6 million with $2 million profit. So,
and
yes.
Additionally, we adjust all of the revenue numbers to US dollars. And so $30 million revenue from a European company doesn't mean that they ended up with the same margins or the same bottom line because of currency exchange fluctuations. And it's been pretty dramatic, especially at the end of the last calendar year, between the euro and the US dollar. So companies that operate they employ in Europe and they have clients in the United States, they're under contract being paid in US dollars, and those dollars go not nearly as far in the Eurozone. So even if they have steady revenue, they might see lower margins. So,
yeah, and the point that's a very good point, but just a little correction. It's not the euro only, it's all currencies. The dollar is going down in every market with very, very few exceptions. But because of current geopolitical situation, that wars and things like that, and and tariffs that have affected the markets and the exchange rate of the dollar.